Welcome back. You're still tuned into Power Breakfast. Now, we've gone through the global picture, but let's now talk about all of the cues that you should track for our own markets and the stocks that could be in focus in today's trading session. We have Mangalam, Vivek and Surbhi joining us to prep us up for this final trading session of the week. Guys, a very good morning to all of you. Vivek, let me come to you first because, while we were going through the global setup, there's a lot that we should track in the domestic cues as well. We have 7 Nifty companies that are going to be posting results.
Well, absolutely right. Today evening is going to be a very earnings dominated, given the fact that, as you mentioned, so many Nifty companies will be declaring the results. While we are talking about the market setup, like you mentioned earlier, the trade setup or the handover from the global equity indices is not looking too good. But what is surprising is the fact that despite such a weak handover, Asian markets are relatively firm, and even the GIFT Nifty at this point of time is indicating a flat start to our own markets. But talking about how exactly US markets performed yesterday, complete underperformance, NASDAQ underperformance continued. Along with that, crude oil prices yesterday did see almost $2 of selling off, but now Brent futures are trading close to the $88.5 a barrel mark. Now, talking about the Indian markets yesterday continued to slide for the 6th straight session. However, what was quite heartening was the fact that intraday there was quite a sharp recovery, especially in the broader end of the markets. And today, it remains to be seen whether markets can take cues from that intraday recovery and build on to those gains. Like you mentioned, so many Nifty earnings today: Reliance, BPCL, Cipla, Dr. Reddy, Maruti, and along with that, some important reactions to especially names like Colgate, Dixon. These companies declared their results post-market hours yesterday. Flat start for our own markets is what we're anticipating at this point of time.
Okay, flat start. Let's see how things really move from there because this week has been pretty hectic for us already. But let's also talk about the individual stocks. And Surbhi is here with that entire list. Hi, Surbhi.
Hi. So first one on my list is Colgate. It was a mild miss on the revenue front, but the company saw a sharp gross margin expansion. Revenues came in at 1471 crores, EBITDA at 482 crores, and margins at 33%. Sun Pharma will also be in focus as Taro reported their numbers. The net sales came in at $148 million. They reported an operating income of $4.7 million versus an operating loss of nearly $7 million. Dixon Tech, the earnings have beaten the estimates. The revenue was largely driven by the mobile segment and the home appliance segment. The revenue was up nearly 28%, EBITDA up 37%, and PAT up 47%. Realtel, the revenues were up 40% on a year-on-year basis, EBITDA at 115 crores, and margins at 19%. Quick Heal, a weak set of numbers over there, revenue down 22%, and margins came in at 14% versus 28% same time last year. Home First Finance, the gross NPA was up nearly 15% on a year-on-year basis, and net NPA was up nearly 16%. Aavas Financiers, the gross NPA ratio came in at 1%, and the net NPA ratio came in at 0.76%.
Okay, that is a lot for us to digest. Surbhi, thanks a lot for taking us through all of that stock-specific action. But let's also bring Mangalam in with all of the futures and options cues because it is the start of a new series. Mangalam, we were talking about earlier how October is normally not negative. Looks like the market and the bears really chose to challenge that.
Well, it wasn't negative until a few days ago. And now, just the October series has seen a decline of 666 points on the Nifty itself, and it's the first negative October, like we spoke, since October 2018 itself. So the first negative October in the last 6 series. In fact, from the September high, we've seen a correction of nearly 1,400 points. At the same time, if you look at the November series moves, this has been known for big moves on either side. So November 2020, we saw an 11% move on the upside, but of course that was an exceptional year. November 2022, last year as well, we saw a decent move of 4% on the way up itself. October to November rollovers by the participants have been 83%. So that means there is more conviction. Where is that conviction? It's unfortunately on the short side. So only 41% of the long exposure has been rolled over, whereas the shorts have been rolled over by 100% and a little more thereafter as well. The Nifty has an open interest of 1.1 crore shares. The FII long exposure at the start of the series is 11% only. So that's telling you that nearly 90% of the FII positions are on the short side. That may not necessarily be a bad thing. Why is that? Because if recent history is something to tell you, June 2022, we had 15% long exposure. The Nifty rallied about 1,100 points. Thereafter, September had a 13% long exposure. The Nifty rallied 919 points. As recent as March, where the FI long exposure was just 9%, the Nifty rallied 834 points. Will that repeat in November series or not is something we'll have to watch out for. What would then be the key triggers? US bond yields is something that we'll be tracking. The US FOMC meet that takes place on November 1. all the developments on Israel-Hamas front. At the same time, we'll watch out for how the second half of Q2 results, a lot of them reporting today, along with the festive season, will be something we'll watch.
All right, we're going to watch for that. For now, it's looking like, at least for today, the start is going to be absolutely flat. So let's see how the rest of the session pans out, considering that we have so many earnings as well, which are going to be coming through. We'll speak